Everyone, this is Matt with the Fundamental Investing Institute. We wanted to devote today's concept brief to the concept of financial accounting, provide just a basic introduction to that. So we very often use the term financial accounting interchangeably with accounting, but really financial accounting is one type of accounting. There are also other types such as managerial accounting and cost accounting, but financial accounting is what we're interested in today. And this is the process of recording business transactions and then packaging those business transactions into the financial statements. And what's important to recognize is accounting is a language, and financial accounting is often called the language of business. And like any language, it conveys information to the recipient. And who does it convey information to? So obviously there are a number of stakeholders within the business, but when we're talking about financial information, the two parties, the two stakeholders who are going to most use that information are obviously the people who are running the business, and then also the people and the institutions who are providing capital to that business. And that's really the essence of financial accounting, is providing information about the business to those various stakeholders. Now, the end point of financial accounting, of course, would be the financial statements. So, if we look at a company, a public company such as Apple or something, and we want to just get a kind of a snapshot of that business, we turn to the financial statements, and there are three primary financial statements in any business. One is the profit and loss statement, which is also known as the income statement. We also have the balance sheet, or as it's sometimes called, the statement of financial position. And then we have the statement of cash flows, and this actually shows the change in cash balances categorically. Down the profit and loss statement, it shows revenues and corresponding expenses over some period of time. So it might be over a month or over a quarter or over a year. The balance sheet, on the other hand, is as of a specific date, and it's a snapshot of the assets and then the corresponding liabilities and equity of the business. Again, on a specific date rather than over some period of time. The cash flow statement is a little bit closer to the profit and loss statement, and that again, it goes over some period of time, so it might be a month, a quarter, a year, etc. And it's the information from these financial statements that give us the ability to make decisions regarding investments in the company, and it provides feedback to the operations of the business. We'll go into this into more detail, but that's what we wanted to convey today. Thanks for tuning in. We'll see you next time.